Okay. Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from the New York Post, from Fox Business, and I'm here with my partner in crime, the granddaddy of data, Bob Sloan from S3 Data, who has his actionable calls this week. He's got a lot more. I have my news of the day, but we do have a guest. I want to get to our guest because our guest is a very, very, very busy dude. His name is Rich Greenfield of Lightshed Partners. I happen to known Rich for years. I admire of his work. He's kind of a shoot from the hip analyst, one of the few left out there, or maybe the only ones out there who speaks his mind. And he does media and technology, particularly media. And Rich, Rich has been at Goldman Sachs. He's one of the founding members of Lightshed, and he's, I would say, the axe when it comes to Paramount, Skydance, and this merger with Warner Brothers Discovery. So I figured with a bunch of left-wing state attorney generals suing to break this up, who better guy to bring on to give us his 2 cents than Rich Greenfield? And Rich, I'm going to turn it over to you. What do you think of the suit? Is it existential to this deal?
Well, it's funny, Charlie. Well, in terms of, let's start with the question on existential. It's only existential if a judge in Oakland decides to grant a preliminary injunction. A temporary restraining order, 14 days, 28 days, who cares? This thing will still close in August. What's going to matter is between now and the end of August, that judge is going to have to decide, this is a Biden appointee, is going to have to decide whether or not to grant a preliminary injunction that would stop closing until trial. And trial, I don't know. I mean, I would be surprised if it happened before 2027. And so you really slow down this transaction. We've obviously seen the Ellisons lawyering up and bringing on Paul Clement, who's a Supreme Court lawyer. And so you're like, wait a second, are they already thinking this is going all the way? Like, that could take a long time. And so I'm not saying scuttle, but the question is obviously all about timing. Ellison's trying to move very, very fast. And, look how fast he was able to move and sort of overtake Netflix. Netflix withered pretty quickly when you look at it, right? How quickly can he actually get to closing? Nobody thought he'd be at the goal line in July. Like, nobody. Now the question is, does July
I did. Give me a little credit here. You make a great point. So if you get this preliminary injunction, which delays it, right, indefinitely.
I mean, till trial.
Okay, so you go till trial. Now, who knows how long? I've covered these things. They take forever. These antitrust trials. I covered the Sprint T-Mobile thing, which didn't end in a day, that's for sure. And there's a ticking, what do they call it, a tolling fee to shareholders?
It's called a ticking fee. So it's $7 million a day.
That's not like, that's a lot of money to be. $7 million.
Charlie, hold on, Charlie. Charlie, you've got one of the wealthiest men in the entire world. They are the controlling shareholder of this company. They're putting in tens of billions of dollars. in the scheme of $100 billion transaction, $7 million a day, even if it goes on for quite some time. I know it sounds like a lot of money to the average American, but I'd say in the scheme of this transaction is relatively minor, especially compared to the break fee. Remember, the break fee is $7 billion. So
Right.
it takes a lot of days to get to 7 billion.
So so your best guess is he can wait that out, and they will wait that out.
I don't think he has a choice. He believes he is on the right side. He believes this is pro-competitive. The question becomes, he's looking at it through it's very clear what's happening. Paramount is looking at this of, we're fighting against Netflix. The only way we can compete with Netflix is to buy Warner Brothers. The government's going, well, wait a second. There's this market called theatrical that Netflix doesn't really participate in. What happens in that theatrical market and how much power do you have? There's the tentpole theatrical market, which I actually thought initially sounded like a stupid sort of subgenre.
Right.
But then I went through some of the case law, and there's actually a 1986 case from the circuit court in California that actually defined tentpole movies that was actually used in that Penguin. Remember when that Penguin transaction was blocked on antitrust grounds a few years ago?
Yeah, and a tentpole.
It used the same.
Just,
tentpole books was actually a term they used.
But just for our viewers that don't understand the nuances of media, tentpole, you would say that's blockbuster, right?
Correct. Like the Odyssey this weekend,
right?
Like those types of films. But then the wild card, Charlie, that nobody was talking about. Like I followed this stock for forever. I followed this transaction from the very beginning. Nobody was talking about the government pushing back on cable network power. And so what they're basically saying is, hey, you're going to have 50 cable networks. That's going to give you a tremendous amount of leverage to raise rates. It's sort of an age-old practice in the media world, right? Aggregate cable networks and then use your heft to raise rates. That's exactly what Tegna and Nexstar are trying to do by merging, having more market power to raise rates on distributors. That's obviously the same idea that a judge in California granted a preliminary injunction against. And so I think that nuance actually is more problematic than actually the movie side of this.
I think you're right. But let me ask you this. Isn't that the argument that the Trump administration during Trump 1 tried to use to break up AT&T Time Warner?
Actually different. In the AT&T Time Warner, if you remember, it was a vertical merger.
Vertical.
So this was vertical. This is a horizontal transaction. So this is taking the Warner Brothers cable networks and adding them to Paramount. In that case, it was, hey, we have the distribution, DirecTV, we have AT&T cell phones, and we're combining them with a large group of cable networks. So that was vertical, actually. And it's funny, the person that was actually fighting that is now the general counsel of Paramount.
Yeah, we should point out Macon Del Harim.
Rich, what is Netflix thinking right now? What's their posture? They see this suit coming. They don't, what do you think about their involvement? What do you think they're thinking at this point in time?
I think Netflix is just,
watching
having large competitors distracted by M&A is never a bad thing, right? Like the longer this takes is probably a good thing for Netflix, is probably good for Disney, is probably good for NBC Universal. Because again, everyone at Paramount is sort of waiting for that next big step of integration and what happens to Paramount Plus and HBO Max and how do they get integrated. And so the longer you just slow roll this, the less competition you face. And so I don't think they're upset. I would be surprised if anyone in the media space is upset by this. And you know what, the piece that no one's really talking about,
except for Paramount and for David Zaslav.
Zaslav's doing just fine whenever this closes.
That's right.
We're not worried about David Zaslav.
We know what his salary was last year. And,
I'm not worried about David Zaslav.
Well, I was talking to the people at Netflix. Is it Netflix? I keep saying Netflix. By the way, I've been conflating Netflix and Netscape just because Rich was a tech analyst, so it brings me back. But I was talking to the people at Paramount today, and they believe that this is all being orchestrated by Ted Sarandos and Netflix. That they believe, they were kind of drawing these wild. They were kind of wild conclusions. They were telling me that an economic research firm that used to work for Sarandos over at Netflix Well, he's now doing stuff for Bonta, the AG of California.
Right.
I mean, listen, I'm sure he's economic.
Charlie,
research can work
I
for
will say
everybody.
it is odd. Paramount seems weirdly obsessed with Netflix. Like they're so
Yes,
focused on beating Netflix and being Netflix versus just actually sort of focusing on their own driving shareholder value. Like every press release, everything they put out has Netflix multiple times in it. It's sort of like weird how obsessed
right,
they are.
right. Their last press release would mention Netflix, I think, in it, didn't they?
It
Like,
did. It's like they keep
I read that. I was
they
like, whoa.
just keep talking Netflix, and it's like just focus on your own business. Like focus on your
Yeah.
own business, and if they're really confident in winning, I don't know why they're threatening through the press to leave California. Like I would be going to California and saying we'll increase production in the state by $3 billion,
Well,
or
let me
we'll
ask you
hire
that.
this many more people. It seems like there's so many better ways to go at this politically than the way
You saw that.
Paramount has.
Okay, you
Yeah,
saw
but
that. You saw that semaphore leak
Yeah.
to them on it. What do you make of it? I thought it was. I didn't take it seriously. Did you take it seriously?
No, you're not moving. I mean, you're buying 2 studio lots and you're saying you're committing to, they've already committed publicly to staying in California and operating 2 studio lots. And then they're leaking, well, if you sue us, we're going to just leave the state. Like it doesn't, it seems like a very odd tactic. If you're really in a good legal position, which I've
Right.
thought they have been for quite some time. I mean,
Me
even
too.
going back to when you and I were talking in the Netflix, when Netflix was winning, we always acknowledged the easier road was Paramount than Netflix.
Yes.
Like,
Yes.
there's no doubt about that.
Well, they did tell me that they could just move their corporate headquarters to like Texas or wherever. I don't know.
Who cares?
Nevada,
And that's
whatever.
irrelevant. That's irrelevant.
Right. Yeah. Yeah. I mean, just but I have to admit, when I saw that the day before, I was like, oh, come on, guys. This ain't gonna work with.
I mean, it
some,
is sort of
you
funny
know-
when you have all of your talent basically in New York and LA. You're going to have all of your senior management team flying around the country to do meetings with like talent. Like it doesn't seem very talent friendly. Like you want to be like at the restaurants in LA and New York with your talent, but your corporate offices are in Nashville. Like, give me a break. Like that just sounds
Yeah.
bad for business.
Hey, listen, you have a heart out in a few minutes, and I gotta ask you this because I got dragged in the middle of this shit show between you and Aaron of AMC, the CEO of AMC, the the leader of the apes. What would he call himself? They called himself the Diamondback for a time, or
Diamond
Diamond Hands, but he was like the
silverback.
the silverback, the big ape of all that,
Yeah.
that led the charge to pump up the stock. As we know, the stock is now like 99% off its highs, and it's been diluted. And he took issue with some of your analysis, saying that you misrepresented the amount of dilution and this and that.
Charlie, we made a
honest,
big mistake. Charlie, we made a big mistake. Instead of saying they went from 10 million shares to 920 million shares, basically by diluting shareholders repeatedly, they went from 20 million to 920 million. So they only issued an extra 900 versus 910. I mean, first of all, the stock is irrelevant. No investor cares. It's too small. Like
Right.
this is not a stock any public market investor we talk to on the institutional side cares about anymore. It really should have gone bankrupt and restructured and gotten rid of their debt years ago versus this never-ending dilution. It's just unfortunate, and it's sort of depressing how much stock Adam Aaron sold at much higher levels. Like that's the thing that really irritates me is he took advantage, I think, of a lot of retail shareholders throughout this process, knowing the dilution that was coming. And that's sort of upsetting. But you know what? The honest answer is box office is still substantially below where it was pre-pandemic. And the thing that no one's really talking about, Charlie, because I think right now you're about 20% below 2019 levels. But what's scary is that's with ticket pricing that's 25% higher. So actual butts and seats are actually
Right.
down over 40% from before the pandemic. And that's the thing that should really scare anyone that is investing in movie theaters. And I'll tell you, as good as this year is relative to the last few years, next year doesn't look so good. So just wait.
So he has to dilute more given his debt load and cash burn situation. Is that what you would say?
I call him the king of dilution.
Okay. Just so you know, full disclosure, I invited Adam Aaron on here, and he said, let me see if I can find it. It was kind of an interesting comment. He goes, like, that guy's the last guy I want to debate or something. That's what I said. Can you come on with Rich? And he says, that guy's the last guy that I want to debate, or something. It was something like that. It was funny. But I was like, well, you could come on yourself, and we give you the
Give you the same.
I will never appear anywhere proximate to him. That's
Well,
what he
we were
said.
both at Charlie. We were both at the Odyssey premiere last night. He didn't say hello to me, but I did see him from across the room.
Really? Did he give you a dirty look or anything?
He just walked right past. He did not say hello.
And so, what was your Rotten Tomato score of the movie?
Oh, the movie's I think it's one of the best movies I've seen in 20 years. Like, this is best picture for sure. Matt Damon's incredible.
Okay.
Go see it, but see it in IMAX. See it on IMAX, 68th and Broadway. See it on the biggest screen you possibly can.
I think I'm going to wait until it goes to streaming.
No, stop. Just to prove that it's all one market.
Yeah, anyway, Rich, thank you.
Thank you.
I appreciate your time. You're one of the best, and you always you shoot from the hip, and that's what we love about you.
Right from the shoulder.
Talk soon.
Talk soon, man.
See you.
Thank you.
Thank you.
Well, that was interesting.
That was an interesting conversation.
I like Rich. Rich is a good man. He
straight
guy, and he'll battle with you on Twitter a little bit, but that's what I like about him. He's never he calls him as he sees him, which is what I like about it. And
well, he put the look, we got a lot of insulting. But look, anytime you mention AMC or GME or any
right, remember these
meme stock, you're gonna get
the true believers.
We get that. But if you just listen to him for 10 seconds and said, okay, we got 910 million shares versus 920 million shares, basically the amount of dilution that they're off was infinitesimal versus the actual impact, which was massive, right? So I think anybody with a clear, rational mind would listen to those things and understand exactly what happened.
Well, Adam Aaron, I mean, I've spent some time, and I like Adam too. I'm full disclosure. You can come on here anytime and rebut everything that we said. I don't think Adam would rebut the fact that he did a lot of dilution.
He took what the market was giving him, and as a CEO for the company to raise money for the company.
That's what he says. Yes. Would you do? I do the same. Wouldn't you? I don't know if I would do sold.
I think he has a fiduciary responsibility.
He did sell like
to the shareholders,
$43 million worth.
Do the right things.
Yeah,
it was the right thing to dilute everybody and raise money so that they could actually see if movies would come back, and that was the bet, and that's what they did.
Well, that gets into what Rich says. Is it a fiduciary responsibility to keep this thing going?
Well, he said it would been better off restructuring. But hindsight's 20/20.
Yeah,
right. In the middle of this craziness, and you're getting basically really cheap capital, you do it.
I don't know how a middle class family affords a movie now.
It's not possible.
I mean, I someone told me that they took their kid, and I know a lot of rich people. Just so you know,
it's like $100.
I was like, these are people in New Canaan and Darien, Connecticut, and they're like, I'm like, what?
Yeah.
My parents used to be like, what was it, $3?
Not even
25 cents for a soda.
Yeah,
it's just.
It's the interesting stat is not only is viewership down, we know that, but the prices are up. So the overall impact means
he made that good point.
It's a great point.
Right.
Viewership is really down 40 or 50%. And that's
and your price point is
even with great blockbuster movies like The Odyssey, which he obviously loved, it's really hard to change that behavior. Once people got out of the theater, it's hard to get them back in.
Who else is starring in The Odyssey? I've heard mixed reviews, to be honest with you. I don't know. I'm a big devotee of the Drinking Bros podcast.
Yeah,
they were taking some issues. Who is in The Odyssey? Let's see who's in it. They were like taking issue. Matt Damon's in it. Well, everybody likes kind of Matt Damon, right? Anne Hathaway, I kind of liked them. Athena is played by Zendaya. That may be interesting. Robert Pattinson's in it.
There's a lot of stars.
Charlize Theron's in it. Well, there's a reason I might go. John Barenthal's in it. I like him. All right. I don't know. I'm like John Leguizamo's in it. Maybe they don't like him because he's kind of lefty. I'm just trying to figure out. Okay, they took issue with some of the stars in it.
Well, let's get to. We don't have to give the Odyssey a free commercial. We're here to talk Wall Street.
Yeah, Bob. You're gonna go watch it tonight, and you're taking the next jitney to the Hamptons, and you'll be at the Sag Harbor movie theater tonight.
I'm working. We're busy.
You're busy. Of course you are, because it's S3 Data is the number one independent data provider on the Bloomberg network. It's why it's basically the best positioning tool, I believe, based on not just because I like you or we do a podcast together. It's because I've used the data. It works.
And it works.
And based on not just that, but based on reputation from people who use it.
Well,
Why don't you give us some of your highlights?
So we were talking about Paramount, Oracle.
Mm-hmm. Now let's be clear here for the viewer. Paramount was essentially the deal to buy Warner Bros. Discovery, which was, Rich said it was $110 billion deal, whatever he said, but that's with debt. It was an $80 billion equity deal. Be that as it may, the money came from Oracle. How did it come from Oracle? David Ellison, who runs Paramount Skydance, essentially borrowed the money or as backup money from his father, Larry Ellison, who is the co-founder of Oracle.
Yes. So we thought we would start with Oracle. We knew we were going to have Rich on. And there's a lot of really bearish sentiment around the stock.
Yeah, it's funny you say that.
A lot of bearish.
Somebody like
the short interest is at all-time high. Okay, that's number one.
Yeah.
The active long to short ratio went from 13, meaning there were 13 times the amount of active long managers in the stock compared to short interest. That's not gone down to 6.
Someone just emailed me today.
CDS is at 170 bips.
That's scary.
That's way higher than the financial crisis.
Says Larry Ellison's at 176 billion now. Now that sounds like a lot of money, which it is, but it's down from whatever he was. What was it? What was his high? 254, maybe
something bigger, right? But so it's just the short interest has almost doubled over the past year, and the short notional is now above 5 billion. Even as Oracle stock has fallen about 40%. So you're seeing that short interest is high. You're seeing that active longs have trimmed some of their position. And we love looking at the ratio between active longs and short position. Things that are expanding where the numbers are getting bigger, that's a bullish signal. When they're contracting, it's bearish. You go from 13 to 6, that's really bearish. People are just not happy with the amount of debt, and they're not happy with the hyperscaling investments, and they're not happy with the media consolidation plays.
Really?
Yeah, the numbers are the numbers.
How's the media consolidation play into this?
Well, because they had to issue some debt to go do the deal.
Ah, interesting.
Right, so your CDS is now at 170 basis points.
Oracle had to issue debt to finance the Paramount deal, Warner Brothers?
I'm going to say that there's a reason why they went out and issued like $100 billion worth of debt.
I always thought it was to build out infrastructure into AI and all that.
Money's fungible.
Oh, interesting.
Money's fungible. Now, how does it find its way from one pot to the
other?
Yeah,
no, I got
that you. I'm not going to opine on that. We don't know, but certainly the marketplace is telling you hey, that's too much.
Interesting.
Too much. So that finds its way to the next stock we want to talk about, which is one of our favorites, which is CoreWeave.
What's a day without CoreWeave?
CoreWeave is another really fascinating stock because as people may know, it's a $40 billion AI hyperscaler renting out NVIDIA GPUs to AI labs and enterprises. That's the business model. You borrow money from the likes of Blue Owl, you go buy the chips, you rent out the capacity. Well, something funny happened along the way, which is that Meta said, we have excess capacity too, so why don't we compete? And they're renting out their capacity. So all of a sudden, a customer has become a competitor. And so what's happened? You've seen the stock price has retraced about 66% of its fall, but then you're seeing short interest really stick in and then rise. So even as the stock prices fade, you can see this on the screen, which is the black line there. You can see short interest going way, 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 way higher.
Ooh.
Right. So as the stock price is fading, you're seeing short interest really lean into it. So that's you're seeing, again, more concerned about CoreWeave. It'll come back into play. We've always thought that this was one of the more important stocks in the stock market. We still say that. And that's why we shout out when we see something. We see something that dramatic, and you also see that the active long short ratio went from 8.6 to 1.9. So Oracle skewing bearish, CoreWeave skewing bearish. People are getting antsy about hyperscalers, antsy about distractions, antsy generally. And you're seeing the short interest actually stick to it. So we thought that was an interesting data for the week. You look at some of the long positions, other than NVIDIA and some of the passive investors, every other type of investor is either marginally down or down.
Really?
Yeah. So you have
markets are like never ending. It looks like here.
Yeah. So
NASDAQ is up again today.
No, I get that, but CoreWeave isn't a huge part of any index, right? It's a $40 billion stock. That's nothing. But it's important because of the business model.
Interesting.
So you're seeing active long and hedge fund long interest, flat to down in the stock, short interest up, generally not so great for the near-term price action for that particular company. If we want to look at healthcare versus technology and one-year positioning growth, healthcare continues to be one of the most crowded trades that we see. Hedge fund longs are up 60%, and shorts are up about 75%. So you're seeing gross exposure rise in the healthcare sector, which is pretty interesting. Active investment has outpaced passive investment. And so what does that all mean? It means that real stock pickers are back in healthcare. And as a cohort, some of the investors with the best returns, you can see as a cohort when they get into these stocks, that particular cohort does a lot better than people that follow them because they're early and they get the moves early. And so healthcare is a very interesting sector. We're going to come out with a piece next week where we'll put more energy behind that data. In information technology, hedge fund lagging, passive led, passive investment was up 41%, active was up 39% exposure, hedge funds long up 55%, but they all of that really badly trailed the amount of short interest. Short interest almost doubled in infotech sector. So we highlighted Oracle, we highlighted CoreWeave. You look at healthcare, which is interesting because that's the dynamic where you see stock selection actually be important. But in infotech, you're seeing short interest rise dramatically. So those are a couple of tidbits from us this week, Charlie. I'll hand it back over to you.
I just want to give you some kudos here. SpaceX shares fall below the IPO price.
I know. We talked about that.
Now tell me, how far you think it goes?
I have no idea.
There's a lot of
no idea.
Is there more runway down?
Yeah, I probably. Well, I mean, it's a brand new stock. There's no technical analysis. There's no. It could go anywhere. It literally could go to. I mean, the IPO price is 130. It could go to 100. I could see that.
Interesting.
It's pure emotion.
I when I read the prospectus, I was like, it just it didn't seem to compute to me. I mean, they're in a lot of different things. It doesn't seem like it's a.
One of these things. Can we go to Mars and mine Mars for minerals? Can we go to the moon? Put these things on. It's the art. I mean, okay, it's an engineering company that can make imagination happen. Would I bet against that in the long term? No, I would not. Short term? Okay, they just raised $100 billion in capital. They're going to have to show something.
They're going to have to show something. That's the way the markets work.
I don't even mean like revenue. I'm just saying like, okay, this is the business. This is the business we're in.
I know.
This is how it's going to go.
This is the coherence of it.
Here's laid out for me. If it's Starlink, if the whole thing is Starlink, okay, the whole thing is Starlink. That's fine.
Just tell us.
Yeah.
I think that's kind of like the problem with the Iran war. You don't know what Trump's real goal is, or I mean, listen, I give him credit for for doing what he's done. That he's said enough's enough from these lunatics in Iran. But at some point you do have to have some coherent sort of.
But Trump is the center risk book, right? So the way a hedge fund works, and the way a multi-strat works, they have all these pods, right?
Right.
And they have allocated amount of capital, and they trade within very strict risk limits. And then the founder gets to see all of that flow. So let's say you have 200 pods around you, and you're the founder. Let's say, Charlie, you're the founder.
Mm-hmm.
You see what
I'm the Izzy Englander of S3.
Name names, but whatever. You're the you're the man.
Steve Cohen.
Fine. You're the man,
right?
And the center risk book gets to see all the flow. Now, every manager doesn't know what the other manager is doing. The only person that knows what the hell's going on in total is the center risk book. Trump is the center risk book.
Oh,
you don't know if you're going to be long or short. You shorted something, he goes double long it. Now you're long, right? So, you don't know if your position changes so much when you're negotiating with him. He does it purposely.
That is true.
It is not an accident. I think people that look at this and say this is an accident don't really understand that dynamic. And I try to explain why he does things a certain way. That's why he does things a certain way. He understands it. I'm the ultimate risk. I'll decide what the quote unquote firm does. And you may think you're long, but actually I'm shorting against you.
So he doesn't. So Marco,
I'm neutralizing your position.
So he takes info from Marco and arbitrages info from JD, and comes to a separate conclusion based on doesn't matter.
And they have opinions, and all of a sudden, it's the absolute opposite. Like the direction is totally different. So the thing, his style with Iran is exactly that.
Mm-hmm.
It's every day is something different. Some people think it's seat of the pants. Actually, you're just keeping a lot of people guessing.
Yes.
And that's not such a bad thing.
You might be right. By the way, he gave if you notice, the oil was down today, $75 a share. Here's the interesting thing. I've been talking to a lot of people in the market, just what is the sort of shit show point for oil? This market got legs. It's up again today. I mean, it's just amazing. And kind of shrugs off what's going on over there. But is there sort of a break point where oil hits a certain level, you could see some bad stuff? And the number is about 120, 130.
That's a long way to go.
And that's a long way to go.
And he's been very careful, I think, this time around to say, we're not hitting the oil itself, but we're going to hit the infrastructure around the oil. Right?
What he said, bridges and energy source.
That's next week.
That's next week.
Who knows?
Because they may come to the table.
Who knows? I mean,
I don't trust them though. Every time they come to the table, it's like a lie.
Well, at some point, you can't just bomb your way back to the table.
I think you have to take the bridges out first, and then say, okay, well now it's
everything right. Everything has to be in degrees.
Yeah. Now it's we take and then go to the next one. So we hit a little bit on Paramount, and Warner Bros. And Bonta, the Attorney General from California, was joined by Tish James of New York. Not surprisingly, the real story here is a Trump story. Getting back to the Trump, the Trump, the man, the president. Because Larry Ellison is close with Trump, that is going to be, they want to get that to be the headline to generate enough publicity to show that Trump is meddling in everything, including the free press, which he'll own.
Let me ask you a question.
But let me just say, this is what their plan is. Because even Rich said it on its face. This is kind of like a bullshit suit. I mean, they're going to control the blockbuster. I mean, by the way, who's to say what's a blockbuster? Right. Blockbusters change. Some blockbusters do well one year, they don't do well the next year.
Or there's no knowing what a blockbuster is.
Yeah, that's another thing. So I mean, that's kind of a bullshit metric. 2 studios.
You're not moving that.
They control CNN and CBS.
Well, that's a big deal, I think. But more shows
Obama,
like this. But by the way, every day that goes by,
Obama allowed MSNBC and NBC.
True, he did.
I was there for that.
But every day that goes by, and there's another podcast that comes out, and another one, and another one,
I know.
and another one, and people just want to get their news information from this type of medium. The CNN, CBS thing becomes less and less and less and less important. So I'll ask you a question. Who do you think the Democrat nominee for president will be?
That's a good question. Well, who are the candidates? Kamala Harris.
Pritzker.
Maybe Newsom, definitely.
AOC.
Probably.
Shapiro.
Probably.
Bashar.
Probably. So
that's like 7. I just named like 7.
That's 7.
Who else? So I think, what's going to happen? You're going to get 15 people on the stage. These people should be actually looking at the 2016 election, what Trump did. Now, he was up on the stage with 13 other candidates, and it was just Hunger Games. Right?
Well, he just went wild on them, though.
Well, but
no one would go that low.
So,
I just wonder if these guys are.
Would Elizabeth Warren throw a hat in the ring? Would Bernie throw his hat in the ring? Who knows, right? So there's all these different things. You're going to have 10 candidates on stage, and they're all going to be shooting at each other. They're going to be so distracted.
Who could go the lowest? Who could captivate everybody and go the lowest? Because that's what Trump did.
Who could go the lowest and captivate everybody? I would say AOC. That's what I would say.
All right, then she might be the
Pritzker's got a lot of money and he's got a big state and
he's not stupid. That guy.
He's not stupid.
I've seen him debate.
He could actually be the nominee.
Yeah, I mean he can go low and he can debate.
Right, he can do it.
I mean, so can Gavin Newsom, but he's just a little too swarmy.
He could go low too.
Yeah, he does. He definitely could go low. But I mean, I just think I don't know if he sells it as well. Trump was authentically crazy back then. Listen, we used to have debates. Like we'd rent out the room at Scaramucci's place, Hunt and Fish. Anthony Scaramucci, he's a friend of mine, at the Hunt and Fish Club downstairs with his partner Nelson Braff. We'd rent it out. They give us some food. We pay them obviously, and then we'd watch the debate. Like it was,
I forgot one guy, Ro Khanna. I forgot him too.
He goes low.
He goes really low,
but he's so full of shit that it's hard. I mean, the guy's like a gazillionaire. It's hard to hear the class warfare thing out of him. But so we used to go to this and watch Trump go nuts against Jeb and this one, and and it was like kind of like, and we would indulge in it like by throwing rolls at each other when Trump would go nuts. It was like really, it was almost childish. It was almost like a frat party. It was almost like Animal House but it was fun, and that's
all WWE.
Yeah, it was WWE, but I see Trump doing that. I don't see any of these other politics. I don't even see AOC doing that.
She might have to, because he set the example of how to eliminate 15 other competitors on stage.
No one does it
in
like him.
In a presidential campaign. Like it or not, it is there, and it's history, and it worked.
Before we end, I just want to say that I've been every week I track New York City 10-year bond yields,
and
I saw
higher and higher.
It leveled off and it popped just recently. Yeah. This is around the time that it was, a bunch of headlines came out. Mondami's still talking about taxing the rich and doing this and doing that. I think it was around the time where he said there's no Italians that live in New York City. So maybe that had something to do with it. Some Italians sold their bonds, but there was a noticeable pop in bond yields. Yields go up, prices go down over the past week.
So why exclude Little Italy?
I thought we were supposed to be a financial show.
We are a financial show, but
I did write a column on this. Did you see the column?
I did. That's why I asked.
Okay, so and there is a financial answer to this. Okay,
right.
The financial answer goes like something like this. I don't believe Mondami hates Italians, like personally. I don't think he's a racist against Italians. But where he gets his worldview is from cultural Marxism and Marxism in general, but cultural Marxism, a little different variation. Like Karl Marx created this class struggle based on class, the struggle based on class, where the classes would rise up against the bourgeoisie and create essentially a dictatorship of the proletariat before they moved on to this utopia of communism. Cultural Marxism blends that with race, and they go even further. It's actually much more absurd. They disregard class. They look at race. Even if you're a poor white person, it doesn't matter. You're part of that oppressor race.
Right.
So Italian Americans who generally in the city, or you could say some of them are very rich. We know that they work on Wall Street, but Italian Americans are often very working class. They work my dad was a construction worker. I'm the first person who went to college, a regular high school in my family. Right. Both parents went to trade schools. But we're still part of that oppressor race because we come from Europe. So and so are the Jews, because they're part of that oppressor race in cultural Marxism. So are Irish. So are all the ethnic groups that traditionally populated city. And by the way, still, you tell me there's no Italians in the Bronx on Morris Park. You tell me there's no Italians in Staten Island. Yeah, well, I'm just saying that even if you want to say that there are new immigrant groups, and they are, that are populating all these areas, there are still significant areas where there's Italian Americans. And if you sort of historically looking at the city, you should probably have here's where Little Italy is. But under cultural Marxism, Italians don't really exist. They're part of a oppressor class.
I got to tell you, I don't know if we talked about this last week, but when Rockefeller left Cleveland, Standard Oil was a corporation. It was one of the first really powerful consolidators, horizontally and vertically, of everything energy,
right?
Drilling, distilling, and distribution. And they moved their company out of Cleveland in 1884. They moved it to New York and then eventually to New Jersey. But Rockefeller himself actually summered there. His wife was there. And
summered in New Jersey?
No, he summered in Ohio.
In Ohio, okay, yeah. Yes.
And so he would move back and forth between New York and Cleveland. And then one of the tax commissioners, there was a tax commissioner called Agnew, sent him a bill in White Plains for $1.5 million. Now,
back then, it's a lot of money.
Let's say in today's dollars, it's worth like $150 million.
Right.
It's not an insubstantial sum of money.
Right.
And Rockefeller said, screw it, I'm leaving the state. Okay, so what happened, right? He and his wife leave the state. They go to New York. The Rockefeller Institute, Sloan Kettering, Chase Manhattan Bank,
Yeah.
MoMA,
Oh yeah.
the Met. I could go on and on and on.
Rockefeller University.
Right. There have been more Nobel Prizes at Rockefeller University than almost any other country.
It's a science university,
It's
right?
an incredible university. He went out and founded Spelman College, Howard University, et cetera, et cetera, et cetera.
He founded Howard.
He actually was the money behind the expansion of Howard University.
And Howard University is historically black college,
Black colleges, right? So he went out and did trillions of dollars worth of good things.
Philanthropy.
The politicians did exactly what they accused financial people of doing. They did the short-term thing at the expense of the long-term asset. They got the $1.5 million tax headline. It was expedient. It helped them politically, but they lost the century. If those two clowns in Cleveland had left Rockefeller in Cleveland, we'd all be living in Cleveland right now. I'm not kidding. We'd be rooting for the Cavaliers. We'd love the Indians. We'd probably have a hockey team. And, you'd have some of the world's great institutions there. Now, was he an angel? No, obviously not. But he was a builder. And you see, if you're a politician in this town, you got to actually come to grips with that. People are not nice people. I mean,
We know them.
we know them, we've dealt with them, and we're not saying they're nice people.
They don't have to be nice. They run businesses and they
don't have
do
to be nice,
stuff.
but they could be nice.
Yeah, they
They
could
could be
be.
nicer,
Yeah,
but they build stuff, and you're the mayor of the town,
and they take risk.
right? And so when you're talking about muni bonds and saying, hey, BIPs, muni bonds are not supposed to move that much; supposed to be very stable and safe. You see yields rise. You see builders leave. I won't even call them rich people. Builders leave. You got to come to terms with that.
Well, he's not coming to terms with it. His, again, he's
You
both
got to come to terms
culturally and economically a Marxist, and meaning in his heart of hearts. Listen, Zohran Mamdani might be a nice guy. I don't know. I mean, actually, Trump has said he's a nice guy. He might be fun to sit across and have a beer with. I have no idea.
Right.
What he represents is not nice.
No.
And he'll say what I represent is not nice, but I will say free market capitalism has done a lot more to help and save people and to rich people than socialism, or else.
I didn't see any socialists doing what Ken Langone did
No.
at MOU.
And by the way,
And by the way, funding every doctor.
people will talk about
making sure-
Norway
it's
and
incredible.
Sweden. By the way, they adopt a lot of free market. They're not like total socialists. And by the way, their welfare state is starting to bust because of immigration. Because these were small countries. I mean,
That's right.
you couldn't do socialism on a grand scale like you have in the United States, or else Russia would have pulled it off. The old Soviet Union.
Maybe.
China would have done it. China had to basically integrate capitalism.
And, as we talked about last week, I don't know if you've been watching a lot of the news coming out of China is how Neil Ferguson, actually, the fellow you interviewed.
Oh, I know. Niall.
In Davos, has a great article.
Neil. I keep mispronouncing his name. He
Neil,
corrected me once on that too.
The softening of the Chinese economy and what that means for the Strait of Hormuz. It's fascinating. It's a great read.
Yes, I would suggest everybody read anything that Neil Ferguson writes.
Yeah,
he's
always
so smart,
intelligent.
and he's a really nice guy, and he's really just straight shooter. And every time I listen to him, I learn something more. I that's kind of how I feel after listening to you, Bob. Every time I listen to you, I learn something more. I want to thank you for being my partner.
Oh, you're the best.
We're in this about a year, and it gets better every day, and we're starting to we had a good week last week. I noticed.
It did.
Without further ado, I want to call this to an end. I want to thank Bob.
Thank you, Charlie.
For doing this. That ends it for another riveting edition of Risk and Return. Check us out next week.